All right. Balance sheet and liquidity. This is a pretty straightforward balance sheet, especially compared to the other tech companies we've looked at. Cash, they got 42 billion in cash and short-term marketable securities. It's all pretty much just US and corporate debt securities. Most of the debt matures in the next 12 months. So pretty standard in that front. They do, however, have 6.5 billion in long-term equity investments. I have really no idea what's in this. I assume it's probably a lot of private investments. There is, they have a I think it's like a $250 million investment in Giphy, which I don't think they can like get rid of. And they tried to acquire them, if I'm not mistaken, and it was blocked by UK regulators. So that should probably tell you how they're viewed in the eyes of regulatory
they're hated they're hated by everyone. They're hated by the government. They're hated by people that hate the government. They're hated by the people that want to overthrow the government. No one likes them.
Yeah, I mean, if they can't close on a acquisition of gifts, I'm not sure they can close on anything. They actually even tried to close on like a workout app for their for MetaQuest, and it was, I believe, like blocked. So
who knows? That could have been the next Instagram, Ryan. Who knows?
Yeah, apparently. Anyway, debt. They've got $10 billion in long-term debt. So they actually raised this in August, last August of 2022. It's the first time they've ever raised debt, as far as I can tell. I love when they talk. It's our inaugural debt offering. Like,
yeah,
it makes it sound like there's more coming, but we'll see. It looks pretty cheap, I guess. It consists of a mix of 2027, 2032, 2052, and 2062 notes, and has an effective interest rate just under 4%.
This is another example of mismanagement at the finance department. Look, it's hard to be a hater.
Why did they raise this in 2021?
Exactly. 2019, 2020, 2021. Look at the giant companies out there. Look at the best run finance department out there. Apple raising $100 billion of debt. Meta could have raised $100 billion at really, really cheap multiples. Or no, it would have been
before all this metaverse stuff too.
Exactly.
Which means they would have gotten probably not only lower debt from just a lower interest rate regime, but also, if they were earning 55 billion in free cash flow versus 25 billion today, I think.
Right. They would have room to do it even a lot more. And just for reference for people that maybe, just as an example here to show how much, because they would have been able to get probably even cheaper debt than this company. Electronic Arts got, I believe it was 2032 notes at sub 3%. No, and that is basically standard bond, I think. So think about how cheap they would have got that. They would be able to offset all of the interest expenses now through interest income. So again, I just think the finance department, big low light. We'll talk about it later. We'll probably harp on it again. But anything else, Ryan?
I mean, it's not them isolated either. I think obviously there was poor communication to the finance department of what they expected to do. Because there's no way, if it was articulated to them that they're going to spend, however much they have on the metaverse or on CapEx for AI investments, that they would have done what they did. So, I think obviously a lot, just mismanagement all around. Last thing I'll say, basically $30 to $35 billion in net cash. It depends whether or not you include the long-term investments. I probably wouldn't. Maybe you include half of it. I don't really know. And then it also matters whether or not you include the operating leases. A lot of the platforms, like a lot of the data aggregators, include the operating leases, which would basically make the enterprise value closer to the market cap. Ultimately, I would just think about it as the enterprise value is about $15 billion to $30 billion lower than the market cap.
Yep, and that leads right into valuation. I'll keep this one short, pretty easy. $370 billion market cap, enterprise value I have at about $331 billion. And I'm looking at three metrics for this one: EV to gross profit, EV to operating income, and EV to free cash flow. I think that kind of shows three different things. EV to gross profit looks at maybe closer to that core earnings potential from the advertising business than what the operating income would look like for when you combine all the crazy investments they're doing right now. And then free cash flow kind of looks at stuff after their huge capital intensity recently. So EV to gross profit is 3.5, EV to operating income is 9.4, and EV to free cash flow is 12.6. All three are well below the market average. So there's not going to be any. The gripe here or the analysis here is not whether the stock is cheap based on their trailing multiple. But let's move on then. Anecdotal evidence, Ryan. What do you got for us?
Yeah, I no longer, I think I have a Facebook account. I think I've probably logged into it maybe a couple times in the last year just to make sure I'm not missing anything super important.
You're MAU 3 times a year. There we go.
I'm not on Instagram anymore. Used to be. I don't really use WhatsApp. Maybe if I'm traveling internationally and the person that I have to talk to someone who doesn't have iMessage, then I would maybe use it. But really, I don't think I've used it in like 2 years. My friends still use Instagram a ton though. Not so much Facebook. From what I've seen, because I think this is like boring anecdotal evidence if I don't say anything relevant. Reels really is taking off in adoption. We've also seen the contraction in TikTok consumption in the US. I think a lot of that has to do with competitive threats from Reels, from YouTube Shorts. I think they've done a really good job garnering demand and kind of integrating short form video into their user experience on both Facebook and Instagram.
Yeah, they mentioned that 20% of time spent on Instagram is now Reels, which is nice, I guess, for anyone that's worried about the TikTok threat. I got to say, though, we're going to cover Google recently. I did try YouTube Shorts. I got to say that stuff is insane. I mentioned that on another episode we did. It really scared me. But either way, I'm going to humble brag again, like Ryan, and say that I do not use Facebook or Instagram, but I do have experience with WhatsApp when living in Mexico for a while. The app is very prevalent in Latin America and Asia, just like the numbers say, and the usage is very ingrained within messaging, almost like a combo of email and messaging of how we may look at it in North America and Europe. And it has a more social feel to it. It's almost social media-like. It's maybe more like a Snapchat for younger people. Not exactly the same, but it's a bit of hybrid. It's kind of its own thing. Yeah, they actually had stories on it in Mexico that are fairly popular with the locals to use that I saw. And the two things I wanted to talk about, or the question I had is, I wonder whether they're having the same success in Africa as they're having with WhatsApp in Latin America, which would just be Mexico South and Southeast Asia and India. I have no idea. Ryan, you probably don't know. You know as well as I do, but there will be 2 billion people in Africa soon. They're all going to be coming on the internet. And I just wonder whether they're gaining the traction or if there's another upstart there. But let's move on to future growth opportunities. Ryan,